Silver. It's the metal that adorns our fingers, our necks, our homes. But its value extends far beyond mere aesthetics. Silver is a crucial industrial component. It's found in electronics, solar panels, even medical equipment. This dual nature, investment and commodity, makes silver a fascinating market to unravel. And unravel it we must, because something doesn't quite add up. For years, silver's price has been shrouded in mystery, its true value seemingly suppressed. This isn't just an academic concern. The manipulation of silver impacts everyone, from investors to consumers. It affects the cost of our gadgets, the efficiency of renewable energy, even the price of medical care. Understanding the forces at play in the silver market is crucial to navigating our increasingly complex financial world. This is where our journey begins, with a deep dive into the shadowy corners of the silver market. We'll expose the price discrepancies, the alleged manipulation, and the potential consequences. It's time to shed light on the silver secrets that have remained hidden for far too long. The silver market, unlike your local grocery store, doesn't have one clear price tag. Instead, we have two major exchanges dictating the price: the COMEX, based in New York, and the Shanghai Metals Exchange, SME. Here's where the plot thickens. The prices on these two exchanges often tell very different stories. The COMEX, dominated by Western banks, frequently shows a lower silver price. Meanwhile, the SME, reflecting Asian demand, often reveals a higher valuation. This discrepancy isn't just an interesting quirk. It points to a deeper issue: the potential manipulation of the silver price, particularly by powerful players in the West. How can this be, you ask? How can the same ounce of silver have two different prices? The answer lies in the complex world of futures markets, derivatives, and a concept called paper silver. These are not physical silver bars stacked high, but rather contracts representing potential future silver ownership. And it's this world of paper trades where the alleged manipulation takes root. Let's name names, shall we? JP Chase, Bank of America, and other financial giants have long been accused of manipulating the silver market. Their weapon of choice? Short selling. In simple terms, short selling is betting against the price of silver, hoping it will go down. These banks, it is alleged, use their considerable financial firepower to flood the market with paper silver. This artificial oversupply drives the price down, allowing them to profit from their short positions. It's a classic case of David versus Goliath, with ordinary investors often on the losing end. The consequences of this alleged manipulation are far-reaching. It distorts the true value of silver, making it harder for investors to make informed decisions. It also harms legitimate silver producers, especially smaller players who can't compete with the financial might of Wall Street giants. Despite the manipulation, there's a growing awareness of silver's intrinsic value. As we navigate a world of economic uncertainty, more people are turning to silver as a potential safe haven asset. Unlike fiat currencies, which can be printed endlessly, silver is finite. This scarcity, combined with its industrial applications, makes it an attractive hedge against inflation and economic turmoil. Think of it as a financial insurance policy. When traditional markets tumble, silver has historically held its value, even increasing in price. This makes it an appealing addition to any diversified portfolio, offering a potential cushion against economic storms. This shift towards silver as a safe haven asset is still in its early stages. However, as more people wake up to the risks of traditional finance, silver's appeal is likely to grow. This growing demand, coupled with potential disruptions to the global supply chain, could put upward pressure on silver prices in the future. While Western banks have been busy suppressing the silver price, a different story has been unfolding in the East. China, in particular, has been quietly but steadily accumulating vast reserves of physical silver. This strategic move is no accident. China understands the inherent value of silver, both as a monetary metal and an industrial powerhouse. By holding large physical reserves, China is positioning itself to exert greater influence over the global silver market. This shift in dynamics could eventually challenge the West's dominance over silver pricing. Imagine a world where the silver price is no longer dictated by a handful of Western banks. Instead, a fairer, more transparent market emerges, driven by genuine supply and demand. This is the potential scenario that China's actions hint at, a future where silver's true value is finally realized. China isn't alone in its pursuit of silver. Other BRICS nations, Brazil, Russia, India and South Africa, are also diversifying their reserves with precious metals. This coordinated effort among emerging economies further threatens the existing power structure of the silver market. The BRICS nations are home to billions of people and represent a significant portion of global economic activity. As they continue to accumulate silver and other precious metals, they gain leverage over the West. This could lead to the establishment of alternative trading platforms and pricing mechanisms for silver, ones that are less susceptible to manipulation. The implications of this power shift are far-reaching. It could diminish the influence of Western financial institutions and usher in a new era for the silver market, an era where transparency and fair pricing prevail, benefiting both investors and the global economy as a whole. Predicting the future of any market is a fool's errand. However, by connecting the dots and analyzing the motivations of key players, we can make some educated guesses. The silver market is at a crossroads. The old system of manipulation and price suppression is being challenged by the rising influence of the East. What happens next is anyone's guess. It's a high-stakes game of financial chess, with the future of silver hanging in the balance. Will the old guard cling to power, or will a new, fairer system emerge? Only time will tell. One thing is certain, the silver market is about to get much more interesting. As we move forward, it is essential to stay informed and vigilant. The silver market, like any financial market, is complex and constantly evolving. By understanding the forces at play, we can make more informed decisions about our investments and our financial futures. The future of silver may be uncertain, but one thing is clear: this gleaming metal will continue to play a vital role in the global economy for years to come.